What up, everybody? Rhett Weaver here from Inchland, Utah. Want to give you guys some really good news. Interest rates for the past 2 weeks have just been getting destroyed because we've been waiting for this debt ceiling, this bill to basically get passed. Looks like over the weekend, the two parties came to an agreement. And so we're seeing interest rates go a little bit lower today because of the details inside that agreement on what they're going to do, with the debt ceiling being raised and how they're going to generate a little bit of money there. It does go to Congress tomorrow. The bill should be passed tomorrow. But we've got a really big week here. This is a big week just that is going to really dive into what's going to happen in June with kind of the Fed, if they're going to go ahead and raise interest rates and do all that stuff again. With the past data that's happened over the last 2 weeks, it's about a 60% chance that they are going to raise up 0.25%, go up a quarter of a percent again. But we got the ADP jobs report on Thursday and then the BLS on Friday. If we can get really a negative jobs report and then also unemployment to tick up a little bit, obviously that's kind of putting our economy in the situation that we need for interest rates. Obviously, it's kind of weird rooting for a bad economy and stuff to kind of turn around. But that's what we're really looking for is inflation to get controlled, things starting to move in the right direction, and then we should see a big improvement on interest rates. I do want to go over the data that just came out on home sales from January, basically through the month of March. Those details have just been released. So if we take a look at Case-Shiller is any jumbo loan, all the cash buyers, every home that's ever been sold here in the United States, and what's been happening month over month and year over year as far as appreciation on homes. Obviously, there's been a lot of news and a lot of talk that there's a housing bubble, that homes are going to come down in prices with these higher interest rates. But if anything, this is going to show you from the peak of last year when interest rates were even a little bit lower, home prices are still appreciating, and we're seeing a lot of good gains here in the market. So if you take a look at January, February, and March, and even the year over year, it's gone up 0.6%. This is down only 2.3% from the peak, which was last June. And so we're only down 2.3% from last June. Last June, interest rates were a little bit lower than where we're sitting right now, and I think everybody understands that. If we look at FHFA, this is only conforming loan limits, no cash. No jumbos, no cash, only conforming loan limits. From January, February, March, you can see that it's up every single month, and year over year, we're up. And from the peak, it's up 0.7%. So those homes, especially here in the state of Utah, that are under basically $700,000, $800,000, those homes are appreciating because those are the more affordable homes for people, obviously due to income and everything like that. One more graph that I really want to show you guys here. It breaks down just a couple more companies as far as the data from January, February, March. Case-Shiller, FHFA, CoreLogic, Black Knight, and Zillow all reported in January that home prices were coming down. February, they went back up. March, they've definitely really gone back up. So as we can see here, the trend is really good. Want to show you kind of the overview of the markets. If we take a look at it right now, we've got some really good news. We're up 25 basis points, which is great. The 10-year Treasury is down 7 basis points, which is huge news for us. As we can kind of see here, we've been on this big downward trend for almost about 2 weeks now. Hopefully this is where it kind of stamps and it really starts to go up. We can look at the stochastics down here at the bottom. We're finally getting a little bit of a crossover, which is really good news. Usually when it crosses over, it means we should see a little bit of a trend and some relief headed in the right direction. And we should see, hopefully, rates get a little bit lower. But again, those two jobs reports at the end of the week are going to be huge key indicators here. You can tell these lines of support, this red line and this line down here, these are lines that we definitely want to break through. We got to get through. And then obviously, if we can get up back up into here, we've got to break a lot of lines of support. But again, if we can get some really good news Thursday, Friday, we could see interest rates really take off and start that trend. And we see it every little once in a while. We saw it, a month or two ago, and then rates kind of bounce back and forth for a little bit, and then they definitely went back up. So hopefully we see a little bit of it coming back down and see some really good news in the market for us as far as on that. Do want to kind of show you what it looks like on the 10-year Treasury and why we're rooting for it to go red. Again, if we can see these kind of break, all of these barriers of support, then we see that the 30-year mortgage-backed securities are really going to take off. Hopefully this makes a lot of sense for you guys. If anything that you're going to take away from this is we got the news that we needed over the weekend that we've been hoping for, which is, hopefully Congress will pass that bill tomorrow and everything will be put into place. And then hopefully we'll see rates start to get a little bit lower here. We'll see what happens on Thursday and Friday of this week with the jobs reports. Have a good week. Reach out if you guys have any questions. Thanks.